Hi, Larry Berman here, and here's what's on my radar this week. Obviously, I'm in a different place. As I turn my head around, this week is all about whiplash, markets, stocks moving up big and down. The volatility that we've seen in Facebook and Amazon specifically this week, where Amazon was down 7 or 8% the day of earnings. Earnings come up. It's up 10, 15% within minutes. That's hundreds of billions of dollars moving around in nanoseconds. It makes no sense at all. It underscores the nature that the valuation of this market is so fragile. The liquidity is so weak. That we can see massive moves like these in some big behemoth companies. Now, I am not a fan of Facebook at all, Meta, whatever they want to call themselves these days. I think that company is going to shrink in the long run here, and their best days are behind them. But again, forget my opinion on that. It's not a recommendation to short it. But the big value, large cap tech plays, you want to be underweight these names. Apple, Microsoft, great companies, but we're paying too much for them now in the world we're heading into. The employment numbers came out today. Canada, I questioned the strength in the Canadian employment numbers for months, and now all of a sudden we were supposed to gain or lose a little bit, and we lost 220,000 jobs in Canada. It makes no sense. So the statistical errors in the economic data is staggering, and there was big revisions annually to the US numbers today. I don't think we can get a clear sense of what the economy is telling us until we're well through COVID. So that should add to volatility in markets. But here's the thing, have a look at this chart. This bottom line, earnings and earnings expectations continue to go up. Companies are performing, supply squeeze, wage pressures, throw it all in there, companies are still performing. And until this forward-based earnings number starts to really look different and we start to hear different stories from companies, the markets will hang in there and we'll be okay. So to the extent that the Fed makes a policy mistake, I'll go back to this, and over-tightens and overdoes it. Right now, the market's pricing the Fed to maybe do 50 in March. That's in the curve already. So if bad news comes out and the markets respond positively, ultimately jobs are good. That helps the economy and earnings. So we're in that phase now where the markets can be okay for another month or two. The Fed is still buying more debt than they're issuing. And the Treasury's issuing. And so for now, QE is still QE, but we're going to get to that point where rate hikes and QT come in, and that's where we're likely to see more risk to financial assets beyond what we've already seen in the taper tantrum leading up to that announcement that we got from the Fed. Surprisingly hawkish again, a couple weeks back now. So bull and bear picks of the week. Where do we go? I still see a lot more value internationally than I do in developed markets. But in our funds where we're picking stocks, we're buying the tech names with lower PEs. They have less downside risk in a bad market. If you got to be invested, find the value. Find the sectors, find the stocks where the value is, and those are the names that you want to be in right now. We could even see possibly strong and positive returns from those type of names. So value over growth, that continues to be a theme. Very shocked at the weakness in the Canadian dollar given oil prices. Have a look at this chart. Oil's breaking out all over the place. It's not sustainable long-term measured in years, but for months or maybe several more quarters, the supply-demand dynamics and the investment demand supporting that could keep this pushing upwards through 100. I don't believe it, but it is what it is. So It's ESG, it's the underinvestment in these names that is going to keep the supply and demand dynamics in the energy space. Canadian dollar should be a lot stronger than it is. Obviously a bad payroll report, but Canada's generally been outperforming. If we see another huge negative month next month, that could change the dynamics for the Bank of Canada. But I expect once the Omicron shock is through, those jobs will come back in Canada. Again, probably some statistical noise there. So the Canadian dollar should be north of 80 cents with oil prices at these levels. Last time we were here, we were 85 plus. So again, Canadian dollar over US dollar at this point too, as my bull pick of the week. Have a great week, everyone.